All right, welcome everybody. Letting some people come in here. All right, let's get started. Welcome to the Hurley Investments Trade Findings and Adjustments of November 17th. Everybody that's here. Let me just get right into it. It's not going to be a long one today, but just a little follow-up to start off as usual. Last time we talked about taking off puts from this bounce here. Had nice profit in SPY puts. Big jump that morning was due to election results in part. Had good CPI numbers. Inflation only went up 0.4 instead of, I think, 0.6%. So lower than expected, although it still went up. Does this mean we're out of the woods? I said no, but it does mean that we may have a short-term run and possibly start of a Christmas rally. So what has changed? Well, we got even better inflation PPI numbers, not even better, but less than expected on the producer price index side. CPI is consumer price index. But this morning, one of the Fed chairs came out and said, yeah, we're still going to have to raise rates aggressively, and the inflation numbers haven't moved even a little bit enough. So that's kind of sent the market down a bit this morning. So basically all of our good news that had us come up to this pivot point on our market is kind of coming down. You can see it's up from the close, or the open, but it goes off of the yesterday's close. So if I can zoom in a little better, yesterday's close was 39.58 on the market. We're down, opened at 39.19, 39.19, and we're up at 39.39 now. So it's come back from this morning. Kind of market still trying to, I guess, feel and assess what's going on. But if you asked me, we've kind of given up our reasons for why the market should be heading up for a short term with that Bullard Fed's comments that those reasons don't really matter. And, you know, this market is ridiculous enough. It could say tomorrow, yeah, we don't care what you say. We're still going up and we're still buying. And that would be that. And we would get a Christmas rally. But right now, it kind of looks like all of our good news is topped out and is starting to come down. I hoped and would have thought that we'd get up to this 200-day moving average before starting to head down. We're really pretty close. If you look at an SPY ETF chart that follows the S&P 500, it really got quite close to it. It's up at, well, today it's up at 403, and the high on that high day on the 15th was up at 402. So fairly close. But if you see towards the end of the day and tomorrow that we're really not coming back, I have to say it's probably going to start heading down to the 378, 375, 4-ish levels where we have that support there, because there's really nothing in between. You can maybe say this day, but that doesn't really matter because it was just a higher high on the way up here. High right here, low right here. This was a higher high, came back down here, higher high. And we've touched that point, but I wouldn't say necessarily that. I would look at that as a support level, technically, because usually you need a little bit more. We do have a bit here. Get my highlighter again. A little bit here, here, so you maybe could make the excuse, but technicals right now, excuse me, are a little bit out the window when we're just talking about reactions from Fed coming out and saying various things. Didn't get to quite to the 200-day, which technically is where it should have at least tried to get to. Maybe did test that R1 pivot point, but that's not as important as that 200-day. So the market really isn't quite paying attention to what it's supposed to do, quote unquote, technically. So let me erase some of this stuff. You did finally get it confirmed that the Republicans are taking the House, which again was one of the positive things that is being somewhat overlooked now. So this morning we started to get more protection back on. I think that's how you spell Bullard. Recent inflation numbers weren't enough to slow down rate hikes. I'll say market is worried the economy is going to recession. Big companies, I'll say, are laying off employees. Disney, Meta, Google, etc. Yes, Jeff. Basically protection on shares and SPY puts. The SPY puts for us are just to add a little bit of protection. And if we get tomorrow a bounce and it looks like there's some support here that it's starting to head off of, we'll rip those off pretty quick as they're too expensive to just hold on. But having them there to give us a little bit of protection, extra protection, when it looks a little more like at this moment, our next step down is $20 down almost on the SPY. Like to have those there for the time being. So, Christmas rally. Let me write this. Does that answer your question, Jeff? So what do you guys think? Are we gonna get still gonna get a Christmas rally? Jeff asked, do you sell calls with these puts? No, that would put you into a unlimited risk situation. If you don't have shares of, if you're talking about the SPY put still, if you don't have shares of SPY or shares of the stock that you have, then yeah, you're not doing a covered call, you're doing naked short calls. So that's not something we would ever do. Because if it goes up, it can go up forever and you could blow up an account that way. So no, we don't do short calls with long puts. Those would both be bearish trades, so your puts aren't really, they're not doing anything to hedge losses if shares go the wrong way and go up for you. You're going to lose both on the short calls and the puts. The puts, however, cost what they cost, and they're protection on the way down. You asked stock puts. I'm not sure what you're asking me there. Okay, so Jeff is asking me about the stocks we own. Do you sell calls when you buy puts? So it just depends. Right now, we haven't. We did a little while ago on Visa and Google, and it just it just depends on what the stock is doing. Let's look at Google. Had them on through this period and we're able to take them off. So yeah, we wanted a little bit more protection down here. Google has gone sideways for long periods of time. You can kind of see it's traded in this range. But here, after not doing so great on their earnings, added, in addition to puts, added covered calls to make up a little more, and that looked good. Took those off for a nice profit to help on the way down. On Visa's just gone sideways for a long time, so it can't really get above 215. So at various times we have added covered calls there that after it's come down, we've taken those off or let them expire worthless. So has to do with stock going sideways and specifically how earnings have gone that we can make sense of adding covered calls. Usually we don't, because if it's something like Baidu, it can fall down and pop back up. This looks like it hasn't moved at all, but these are huge movements, these little candlesticks you see. I mean, here's 76 and up here is 86, so that's $10 of movement. Those are huge moves here for a $80, $90 stock right now. But it's come down so far that at this point, if we were to put a covered call on, even if it was up higher, the risk of it popping up and getting called away on our shares, getting our shares called away rather, doesn't seem to outweigh the benefit of getting a little bit more credit. Because we're in this process of around here adding shares, and we've added shares earlier. It's so low, we're in the process of adding shares and dollar cost averaging to see it go up at some point. But if it's something like a Visa where it's kind of gone sideways and it hasn't gone down so much that you just don't want to get called away at this point, on something like a Visa, we've gotten called away up at 215 and we put it down back, put shares back on lower, and that's worked out fine. So we're okay in that case getting called away. So yeah, it just depends on the stock and what you're okay with. They've just been on this 215, 200 area for a long time. All right, what else? Talked about, or at least I asked about what you guys thought if we were having a Christmas rally or not. What are your thoughts? Was this our Christmas rally? Jeff says, yes, we're going to have a Christmas rally. William says, I don't think there's enough positive to send us into a Christmas rally. I assume, William, you're talking about positive news. He says yes. Jeff says I think will work higher over the next 6 weeks. So you guys that said yes, can you tell me why? Why do you feel we're going to be higher in 6 weeks? Why do you feel we'll have a Christmas rally? And then I'll tell you what I think. Jeff says we're making higher highs and higher lows since October 13th. Kind of what we talked about, right? So we are doing that. So does that mean, Jeff, that we've had our Christmas rally? Or do you think it's still going up from here? Jim said if it happened, it would be small due to Biden's plans to continue more of the same. Kind of like that explanation. Jeff says the trend is your friend until it ends. Ooh, we got some rhyming going on. I like it. So we are in the trend. However, right now it doesn't look like we could get up to a 200-day moving average. Let's update today. And we really need to see it kind of hold on today. Or tomorrow, I think, to continue this run. Let me look at our couple years ago. So we did have, this was 2020. We had a run into the end of the year. That whole pretty much November, mid-October, November, December was a big run into the end of that year. 21 did the typical fall in September, October, and then ran into November, kind of sideways in December, and then usually you'd call it a Santa Claus rally, where it's a little bit after Christmas. Pretty much topped out there and fell down. Those were all before we had the specific issues we're dealing with now. Talked about a little bit about inflation and raising rates here, but not really a lot. Then when we got going in the new year, big profit taking sell off, and that's when all of the talk on high inflation, interest rates took place. You can see each of these rallies lasted a couple weeks. This one lasted about 2 months. That was in the summer. That was on our negative month of inflation where everybody thought it had topped out. And this was our run for a couple weeks here most recently. So here's what I'll say. It's possible we've had our Christmas rally. It's possible we could continue with this run, and it's also possible that we could come down and test a moving average or support level, and then closer into Christmas and closer in the end of the year get a rally. But really, we're not seeing a huge, since that good news of lower than expected rise in inflation. We're not really getting a continued bounce right now that we would have thought. And the House taking control of the Republicans, taking control of the House has not so far mattered too much. And all of that good news is kind of getting clawed back by those comments from Bullard. So I'll say maybe we've had it. Maybe it will come later. I'll say more later. But I don't really see the catalyst at this point. I'll say I don't really see a new catalyst. So right now, my plan and what we've done is get things protected as the market has made this top up here. If we're wrong, at least on the SPY puts, we can take those off and see if it makes another run up to try and test that 200, which is the point that I would be looking to get the SPY puts on. But if you go through individual stocks, things look a little different. Apple got up pretty close to this 200-day moving average, kind of bouncing between there and the 50-day. Boeing, way overbought for like a week. Had an incredible run. Makes sense for some profit taking, for it to be cooling off. It's already above all of those moving averages, and there's quite a ways to go to test support there. Although we could say this is some support today. Baidu still hasn't gotten up, and we're protected for earnings there. Bank of America, kind of similar to the Boeing ones, where it came up to overbought and is coming back down, test a moving average, and we had gotten protection on up at 38 here. And really, we're just, for most of these, and especially these bank ones, it's about protecting profits. And that's really it. Not necessarily that we feel like it's going to fall dramatically, but just wanting to protect some profits over this run. Another one you can kind of see very different from the market that's just kind of trying to find its way between two moving averages. Came up way above the moving averages on our JP Morgan. Hit overbought coming down. We had gotten protection up there. Let's look at Disney. Disney just kind of stinks. So had a nice couple days there. Didn't even get close to the 50-day. Should have and could have gotten a boost from overtaking Netflix in number of subscribers. And that's one that the market is just being too stupid about. But right now, it's getting dragged down today on comments from Netflix and what was the other one? Can't remember. But of course, it gets dragged down with Netflix, but doesn't get a boost when Netflix has good earnings and Disney has terrible earnings and shows better subscribers, better future prospects. So kind of getting screwed both ways. What else? Disney, Under Armour. Another one had a nice run. Kind of topped out in the time being at this 9, almost got to 10, but 950-ish. Meta. Another one looks similar to Baidu and a tech stock. Just can't get up to even the 50-day. So what did we do last week? Added shares. We did add shares on all of these, which looks awesome as it had a nice run. Now we're just looking to protect profits. And that is really all it boils down to for us today. Should be an up day. Not really working out that way, and most of these stocks, as you can see from the charts, pretty good time to be protecting some profits. And if it goes the wrong way, it goes the other way, we'll just work through it. I'd rather lose a little bit on puts than shares. I'll say that. Because shares are always there to make us money on up days. You can only lose so much on puts. All right. Any other thoughts, questions? Ooh, it looks like I've missed a couple. Jeff said most people are real bearish. I agree there. Jeff said today and tomorrow option expiration, we might see some pullback because of market makers taking money from option players. I think that will work out sometime next week. Now, speaking of next week, and that is true, we do have some monthly expiration on options. Usually that puts us lower on Friday and a bounce back on a Monday after. However, we have Thanksgiving week next week. Which on a holiday week, usually not a ton of stuff going on. Last time around, market was looking good up until day after Thanksgiving, and it fell dramatically from, I think, just comments from the Fed, if I remember right, on inflation getting too high. But typically not a lot happening as big money is out of the market, not doing much. Jeff said Republicans get the House, no one will spend money unless they agree, which means not money being spent. That's a big reason for market to go higher. Well, it's more than that, is just that the market doesn't have to worry about stuff getting through that will affect the market. And it doesn't necessarily have to do with what the government is spending, although that's definitely part of it. But any surprises that the Biden administration might come out with, or the Democrats want to do, yeah, they're much less likely to go through, and gridlock. And that's really what drove a lot of this rally, I think, even before the election, because there was supposed to be a blue wave, or excuse me, a red wave, right? Didn't quite get a red wave, but enough to help, and enough to give the market a little more comfort that nothing crazy is going to get through. But right now, it doesn't look like that news is still helping us. I think the market was expecting a bigger red wave. Even though this is really all we need, is the house to be flipped over. Yeah, I just don't see that the market is taking that in as a catalyst. It's not. We're not really seeing some follow through. Is I guess my point there. I hope I'm wrong though. I'd love to see it continue to go up, and we could rip protection off and see where we get to. But right now, sitting in between here in no man's land, the risk of it heading down to these levels right now kind of seemed more worrisome than the risk of it heading up to the 200 day. That's all. Guys, any other questions, thoughts? Not, that kind of does it for me. Just a little peek into what we're thinking, what we're doing. Yeah, I'm just kind of not impressed with the follow through. would have thought we get a better reaction, and seems to kind of be petering out a bit. All right, I'm not seeing any questions come through. Thank you guys for joining me. Thanks for your thoughts, questions. And we'll see how next week goes. We shouldn't have a lot going on. And you guys have a happy Thanksgiving. Thanks, Jim. You too. Thanks, Jeff, William, the rest of you guys. Thanks for coming and hanging out for a little bit. We will talk to you next time. Take care.